In the year 2020, the government merged the operations of the Industrial, Commercial and Development Corporation as well as the Tourism Finance Corporation together with IDB Capital to form the Kenya Development Corporation. 3 years down the line, we revisit this merger and we look at the achievements of KDC. Joining us on this week's episode of Inside Government, we're talking to the chairperson of KDC. This is Dr. Sakwa. Thank you very much indeed for joining us this afternoon, sir. When you look at the last 3 years of operations, what would you say has been the biggest achievement of Kenya Development Corporation?
First and foremost, it's Kenya Development Corporation is only about, let's say, about 3 years, a bit under 3 years. So the first achievement, you could say, has been to gel and work together as one entity out of the 3 previous entities that were, as you said in your introductory remarks, that were the forerunner institutions. They have done well there. And are now in the new space in which they are trying to forge ahead with a new mandate. A new government came in last year, and as is the norm, when a new government, when a new administration is elected, they have a manifesto they would like to promote. That's the purpose of electing governments each time. Currently, the Kenya Kwanza manifesto is about roughly, in a summary way, it's a bottom-up approach. They call it a bottom-up economic transformation agenda, which in this case for KDC means that they have to work in the furtherance of the transformative agenda that starts below and rises with the farmers, with the producers, and there's many things are being done there by many different institutions. But in the middle ground, in which now that picks up into additional processing, increased production, productivity in the economy as a whole, growing exports, for example, deepening financial intermediation and digitization, things like that, that pick up from what the bottom brings up. And the middle has to work with it. And the top of it are the outcomes we expect to see. We expect to see a bigger share of manufacturing in GDP so that our jobs are anchored in quality establishments, quality in the sense that they would provide the usual things that workers ought to have, insurance, medical cover, quality jobs, so to say, but not necessarily white collar of all types. That's one. Two, that our export promotion, export performance, we can measure it again against GDP, grows aggressively. That way our forex reserves are easier, that can service the economy needs of imports, travel, and so on that the country might need. Better health outcomes, better incomes, better health services, all those things become things that are important. So the KDC is now operating in a changing environment, and as we go ahead, we'll discuss a bit of that.
And when you look at the mandate of KDC, it doesn't differ significantly from the mandate of the Industrial and Commercial Development Corporation when it was set up in 1960s, which was to advance credit to indigenous organizations to help them grow and deal with issues of capital. How is KDC now playing out this role? Now,
first of all, I think it's important to emphasize there that KDC now is a composite of what ICDC used to do and what its intent was from the beginning, what the Tourist Finance Corporation was to do in the service industry and in the servicing of the tourism interests in the economy, and what IDB Capital used to do, which was to support manufacturing and sort of operation along those lines. Now, if we recall, when ICDC was set up, it had both a credit and equity line, in the sense that they provided credit, but they also took shares in some of the companies. And the intention was to use this credit and equity as a means to an end. And as I've said correctly, that end, first and foremost, was that you need a growing economy in which the Africans had a direct stake in, because they had been excluded. Despite those, we now have to think that that might happen. We must increase our domestic productivity and become significant players locally, regionally, and in many ways internationally. KDC has that space to get it to aggressively rethink and re-gear its mandate and seek out opportunities in which they can provide products that are responsive.
When you go back, and I like the fact that you have taken us back to history time, when you look at the sessional paper number 10 of 1965, when the idea of forming the Industrial and Commercial Development Corporation was born, it was meant to help liquidate African businesses that was struggling back then, and also help in the Africanization process of Kenya's industrial base. That we can say has happened over time, because when you look at Kenya's industries, I mean, almost 90% is supported by indigenous institutions. And almost now 60 years down the line, when you look at the current setup, whereby now you have more than 40 commercial lenders, you have more than 1,000 Sakwas. Does the place of KDC still remain in modern day Kenya?
Yes, it does. Because that space grows as you expand the space. The space in which you are trying to catalyze medium-term enterprises, medium to large-term size enterprises, grows bigger. It's almost like the world within a universe, as it were. As we explore the universe and the universe expands, so does our space here also expand. There is still a significant role for it to play. We have really reached one level of maturity, which is that we are now an economy that is internationalized. We still have significant foreign investments who are coming in out of their free will. They're staying out of their free will, depending on the attractiveness of the returns that they will get. You have a new local group. When we say Africa, let's say national, Kenyan, have put aside to the shilling a nationalistic value. But no, the shilling is only important in its exchange. And it's related to our relationship between what we sell and what we import. Who knew that the ICT type instruments Kenya would play with are getting as sophisticated as they are? Our own innovators here, the payment platforms such as the M-Pesa platform and so on, having a global impact and so on and so forth.
Yep.
So there's a lot more in the growing space around the world.
So you're saying there's still a role for KDC to play in Kenya's economic development?
Yes.
And so then the other question comes, there have been proposals for Kenya to set up something sort of a Kenya Export-Import Development Bank.
Yes, yes.
And I know these conversations are also going on, at various stages in government. If we were to get to that point, then are we likely then to get into some sort of multiplication of roles? No,
it might appear like there is a duplication, multiplication of roles there, but in fact, there's a lot of complementarity in them. A lot of complementarity. The Exim Bank, a Kenyan Exim Bank, of course, Kenya is a member of the Afro-Exim Bank in Cairo. It was one of the founding members. And in fact, the guy who wrote the initial terms of reference was a Kenyan, Washington Otieno, was leading that unit from the African Development Bank. God rest his soul. We have been associated with that for quite some time now. What will happen is that those become points of entry of capital. And KDC, its complementarity, would take advantage of those resources to own lend, to pass on, what do you call that, the wholesale, as it were, to the rest of the economy. So it's like a relay. You play one role or another. KDC should also, will also rather, become a direct recipient of foreign capital, not foreign aid. We're not talking about the borrowings we have, just direct investments, ability to help place those resources into the economy. So and the instruments are getting more sophisticated. And through those instruments that are being used in the financial sector, there will not be duplication. There will only be the development space, but there's enough room for many more to come, I can assure you. The banks will be there, the fund managers will be there, our own pension funds will have a role to play, and so on. No, there is room for everybody.
And what kind of incentivization is KDB, I mean, is KDC using in order for, before you decide that we are going to sign a credit line or we're going to get into equity kind of an agreement?
Yes, we have a team. We have a technical team within KDC that does these assessments. If you take the let's say the debt line, which is the lending that they have got, the traditional tools of rates of return, blah blah blah, and so on. Those are used widely, and so on. Plus other assessments, institutional assessments, and so on. But as one of these products that we have got, having done those assessments and agreed with the promoter that this is a good idea, it will give you this return, it will support the economy, and so on. Within our mandate, we are expected, particularly for entrants that are new to the sector, to the economy, or for enterprises that are also exploring the frontiers of our own economy, to say we can de-risk. We can say we are convinced that this risk is manageable, and to demonstrate that in fact it is manageable, we are willing to put in our own capital also, which are not in any way the responsibility of the individual promoter. It's the responsibility of the project that has been promoted, that we have sufficient confidence to put in our own capital as KDC, that is as Kenya, but as KDC, so that by so doing you are sharing the risk, you're de-risking, as they say. So the equity, which is the strategy by which we de-risk on the market, shows the confidence. KDC will be demonstrating the confidence that Kenya has got in the promotion of those enterprises. It works well with domestic promoters. It also works well with foreign investors who are coming in, and they have done their analysis and they feel that, oh, this is okay, but is there a chance that maybe it's not? And if they find local institutions such as KDC being willing to put down their own capital as shareholders, meaning they'll go down if the enterprise goes down, they'll also get an earning if the enterprise makes succeeds, but they also help stabilize the decision making internally. So there are various reasons why you would want to go that route. So you do then assess what level of exposure, what appetite does KDC have, how much shareholding they would to take in, but also how much shareholding the owner of the promoter of the enterprise is willing to let go, and so on. I mean, that they're not going to put in all their brain work to get you started and say, come and take 90%. No. Yeah. Usually give you share of the margin, can be 5, 10, 20%. Yeah. And because you also are injecting capital, it saves their own capital, which they can use in something else or expand the scope. Yeah. They can use everything they had, but by supporting only 70%, and their 30 now is expanded because KDC has put in money.
And when you look at even the history of the ICDC, the predecessor of KDC, I mean, there are some investment decisions that were made, that would say were not prudent. For example, the investment in Uchumi Supermarket, in Kenya National Taxi Company, or Kenatco, that left the company with burnt fingers. And so how do you do some sort of a risk profiling before you invest in a company?
First of all, thanks very much for giving those very good examples. When Kenatco was set up in the 70s, it had a very critical role to play. Within the private sector, the logistics sector in the economy was quite weak. It was both taxi, but remember they also had long-haul vehicles that were involved in trade over land in Tanzania and beyond, into Zambia and down into DRC. Over time, I think the they probably did not do sufficient internal adjustment as companies to sort of work with the market. What that suggests also is that whereas KDC, its predecessor like ICDC did, but let's say KDC might see an opportunity now to de-risk investment in the sector, it's prudent for them also to assess when you should exit. And you can exit even if the return is high, because all you're doing is you are catalyzing you're playing a catalytic role. You're making it possible to prime up that investment. And you should move out and let the private sector, because it's a national asset, carry on and make the earnings. They'll still accrue to the economy. It doesn't have to accrue to the public sector component of it, and so on. The other example you gave was Uchumi. You know, there was a time when Uchumi did really well.
Yeah.
But as you know, I don't want to get into that with specifics. First, I don't have all of the facts with me, but I know the general gist of it. That I think some of it were internal mistakes that were made internally and so on. But we have one constraint. And I'm going to answer your question, how do we assess this risk? But we have one constraint within our legal system. To be able to invest and divest, to be an institution like KDC, you should have the freedom to invest where you see opportunities, or where you can be able to support the growth of that opportunity. They should be able to also to divest where you feel it's time to get out, to allow the private sector to come in, or the circumstances have changed so much that this institution, that investment should be reoriented, and the owners don't want to reorient. You should also be able to come out of it and let them go ahead. In a simple form, a simple expression, in Kenya, that moving out is called privatization.
Yes.
And the law is extremely rigid on privatization. When you hear privatization, you think in terms of selling a physical asset, and it's going to fall in the hands of people and so on. Privatization also means that you hold shares. They may be on the stock exchange. You no longer want to be in that sector, and you sell off your shares. In our setting, it's called privatization. And there is a whole slew of approvals and clearances by different people. You can't operate like that.
Which can be very slow
Very
and
slow,
tedious.
and it does not even come through sometimes.
And sometimes political.
Yes, and sometimes political, all of the above. And if you're working with the competitors, they decide at the spur of the moment that let's drop those shares now, we'll buy something else. Or just wait, drop now, buy them later. But under our circumstances, you're stuck with them until wherever they will land finally. And by the time you want the decision made, it has to go to
even
all
when you
levels.
can see that the plane is crashing.
It's crashing.
You have to hold on.
Yes, that flexibility is needed. And there are reasons why investor, divestor must be in one hand. You give up this, you take on that, and so on. In the interest of growing the asset of the country. Even if it goes to the private sector, nobody has lost. That has moved from my asset. If you're private sector, the private sector, you're also still a resident of this economy, and so on. So that restriction, there may be other considerations, but certainly the inability to have the flexibility that's required in invest, divest, which many times are simultaneous activities. There are kinds of things in a typical working day. If you left your house and you told your wife what you intend to do, and you intended to pile up a few more assets from the market, you'll come back and say, but I sold some. Now, you didn't have, even if they are your own private assets, you must have the freedom not to tell her before you sell. Maybe you might do that, maybe you don't need to, but when you get in the evening, you can say, we sold this, we acquired that. And you can do rectification as you go ahead. That flexibility is missing. Now, how do
you plan, how do you then bring in that flexibility? Because it is going to be an Achilles heel if it is not addressed now.
No, it is, I think, but it's being handled now. I'm positive that we'll get a positive outlook. Even Parliament is looking at the privatization, there's a new privatization bill that's coming up. And our interests as KDC, and I'm sure many other institutions, would be that you need some flexibility. There are reasons why there are controls, and we understand that you do not want an abuse of a completely open-minded thing, but you can have arrangements in which the reporting is done exposed after the event, up to a certain threshold. There may be assets that are so large by nature of their size. Transactions will take time, and you have enough time to consult and get clearances. But there are many of them are instantaneous that need to be done quickly and so on. So we are hoping that we'll build that flexibility in the new privatization bill.
Very well. And when you look at lending and, of course, acquisitions, do you have a profile of how much you've managed to lend in the last 3 years? And in which sectors would you say have been the hottest destination of investment?
I don't have my figures with me, but I think we have put in something in the range of 4 billion or so in the last 2 years.
4 billion shillings.
4 billion shillings, yes. We have also, because we are coming out of COVID, and things had sort of slowed down quite a bit, one of the sectors that required, that was sort of a low-hanging fruit, quick resuscitation, was the hospitality sector.
The hospitality industry.
Yes, and a lot of it went into tourism and health, investments and so on, because those really were the real priority. Those were the hotcakes at that time. But going forward, there is a lot of interest in technology, in ICT, for example.
Yeah.
There's going to be a lot of interest in manufacturing. There's a lot of interest in, let's say, education in both hardware, but also in services, services sector that we are working with. And I think tourism will continue to grow, and hospitality, let's put it that way, because not always for tourism.
Yeah.
Some of it's for domestic tourism. But if you compare Kenya that we had the early days when I had just come out of college, I was working in the country and we were traveling around. There are many parts of this country, if you went, you would find a tiny room in a lodging behind a shop as the best accommodation 100 kilometers around. Now you find much improved space. We have even got Airbnbs. Yes, suitable for both domestic travel and for international travel. We have expanded the space of access and that kind of thing. So I think that these are going to continue to be attractive. But as we said, in terms of national priorities, that fits into the bottom-up agenda to catalyze the sections of the economy, both the bottom, the middle, so that as you go beyond, the outputs can then they flow back into the system as income growth, as better income distribution, and as better living conditions.
Bwana Chair, before I let you go, I also want to find out, what is the rate of your credit lines, and how do you develop markups for your return on investment?
There are various rates alongside different products. I think you could say the median rate, which also happens to be, I think, close to the mean, is about 9%.
9%.
9%. 9% is well below the going market rates of 18, 22%. We have some products that are about 14, perhaps 15. There are a few. But if you take the median one,
it will be about 9%.
About 9%. It will be close to the mean also, as a matter of fact. So, how do we come to about 9? The cost of capital for KBC has been, for the resources that have come in through the treasury, through government, let's say, come to them at about 4% or so.
4%.
Treasury might have a markup of about 3%. And the reason they too have a markup of about 3%, say on assets that have been acquired for rates at cost at about 1 or below 1, and I feel like that, they would mark up like about 3 because the loan repayment will come from treasury. And once the resources are passed on, they are subject to fluctuations in exchange values, foreign exchange values. And the treasury then says, we accept, when we pay, we will pay to whatever cost we find then. But since this is going to be used for productive purposes, we mark up so that that markup becomes part of the reserve that we hold against forex fluctuations that there might be.
Very well.
And of course, over time, there's lots of money. And then for KDC, the operational expenses they have got, they also run risks of having a less than 100% repayment on it. So to cover that risk, they also mark up maybe another 3 or 4%, and then another maybe 2% for net growth.
And that's how you get to 9%.
About 9%, yes.
Finally, from me, I want to hear from you. What kind of KDC should we expect to see by the year 2027?
2027 is 4 more years from now. Let's take your timeline there, 2027. I was going to look for something earlier, but by the year 2027, we should have a KDC that is the institution of choice, both by the government of Kenya and by our external partners in the placement of capital into the economy. It should become, we should be able to move resources wholesale as we do some retailing. There are many institutions around the world that have resources seeking to invest in different countries. And in the countries that they go, they look around for institutions where they can move large sums. For example, now, the government's interest is in increasing foreign direct investment. We are a very small recipient of FDI, and our FDI levels have gone up and down as they always do. But the intention now is to raise this to come to a level of about $10 billion a year.
$10 billion?
Yes, a year.
So that's about 10 trillion Kenya shillings.
Yes, yeah, no, that's about 10 trillion. Is it 10 or 1 trillion?
It's about, so it'll be about 11.
11, yeah, okay. Yes, about 10 trillion Kenya shillings, which would vastly expand the economic space in this economy. See, if we are operating, I said that, say, the last 2 years, we did about 4 billion shillings. But because, in a sense, it's a new institution, it is reorganizing and so on, then we have had these external factors we mentioned. But that's really a drop in the ocean.
Yeah.
It has to vastly expand. We have to market to our own people, to the economy, opportunities for investment. For example, now, the Kenya Kwanza government has instituted what they call county aggregation and industrial parks in each of the 47 counties. And the advantage there is that each area has something they can do of their own that links them to the rest of the economy. Now, we should get major surprises from there. Some will be very large, others might be small. But it doesn't matter. Be they what they are beginnings of opportunities in this diverse area that we're talking about. Secondly, because of the way in which, say, technology has penetrated in Kenya, the level of awareness is extremely high. Kenya has a huge youth population, educated population also. The levels of high school education, which is a quite adequate level of education in life to get people who want to go into various things of their own. You can do more in education, but about that, you have the tools to understand your basic accounting, the basic numeracy and so on. The rest of them are acquired through the system providing opportunities. You have been in the States, I have lived in the States for a long time, and you find that people with high school education are still very relevant for a country of the sophistication of the United States. In fact, that's where many of the supporting hands come from. They are able to pick up with the technology, and they run with it, as it were. And it's not always a degree that people look for out there. No, they look at what you can do, and so on. Now, so here also, we in 2027, we should have an economy that is vastly bigger in size. We should have a KDC that's a major player in the purveyance of capital and debt, in de-risking, therefore taking out more equity, in reaching more deeply through the various productive sectors, and reaching out in a better geographical way than we have done before, which will affect distribution. regional distribution, and hopefully in that process also household distribution of income. If we reach out to the various areas and not centralize them only in the major cities.
Very good. We can't wait to see that kind of a KDC.
Thank you.
Very good. Thank you very much indeed, Dr. Ali, for joining us, and of course for sharing with us those insights.
Thank you for your opportunity for us to be able to speak to Kenyans, and we are in a rapid transition here at KDC.
Yeah.
That's what we're looking forward to do. We've already begun the processes. We'll talk about that another day, but you're always welcome to get back, and so we can give out the message.
Asante sana.
Thank you very much indeed.
Very good. We have been talking to the chairperson of the Kenya Development Corporation, Dr. Sakwa Bunyasi. He's been giving us an idea of where KDC is going, and of course, a little bit about the past. My name is O'Brien Kimani. You have been watching Inside the Government. Thank you for your time. Have a good afternoon.